Is it finally time to buy Carnival Cruise stock? The company was devastated by the coronavirus pandemic, one of the companies hurt most by the pandemic. The cruise lines were shut down the longest out of arguably any other business during that time. So in this video, I'm going to go through the company's details, look at their financial metrics, and see if it's finally time for investors to buy Carnival Cruise Line stock. So let's jump right in looking at revenue. And you'll notice right away what I talked about earlier. The company had to shut down operations, and you could see that devastating drop in revenue going close to zero. In fact, hitting zero probably during a point in time. And then look at this V-shaped recovery all the way back up to 17.49 billion, and management saying that the cruise ships are over 100% booked. They're selling out. They've got strong sales bookings throughout the rest of this year, throughout the rest of next year. Consumers are absolutely unleashing pent-up demand to go on cruises, right? I can't understand it. I'm not a cruise person, but demand is undeniably strong coming out of the pandemic. There's certainly some pent-up demand here for people who delayed trips, people who wanted to go on cruise ships but couldn't, and now they're saying, all right, this is something we want to do. We're tired of spending time at home. We've bought enough flat screen TVs and electronic devices. We don't want to spend our money on things like that anymore. We want to spend our money on away from home experiences. And so demand is strong, remains strong, and if it continues, I wouldn't be surprised if in a couple of quarters revenue exceeds where it was before the pandemic, because this company has raised prices meaningfully. And so even if it has the same number of people on the cruise ships as before the outbreak, they're going to generate more revenue because average prices have increased considerably. The next thing I wanted to look at is their profitability. How are profits coming along? Sure, revenue is bouncing back, but let's look at profits. And profits are bouncing back, although not as quickly as revenue, not as quickly as revenue. You can see the rise in cost of goods sold here because revenue has bounced back near pre-pandemic levels, but operating income is not yet near that level. So the slope of the upward recovery of operating income not nearly as strong as that of its revenue. However, negative 1.465 billion in operating income is a considerable improvement from the bottom. And again, like revenue, I wouldn't be surprised if in a few quarters this turns positive and this starts to get closer to where it was before the outbreak. One area in particular the company has an opportunity with is its long-term debt, and I'll talk about that a little bit more later on in the video. So during the pandemic, the company's cash flow from operations was negative, profits were negative, and so it had to borrow money to sustain itself, right? It sold shares of its stock also to raise capital, but it also borrowed a considerable amount of money. You can see total long-term debt jumping from around 10 billion all the way up to 33.7 billion. So its long-term debt tripled from 10 to 33 billion. And this incremental $20 billion in debt was not like the previous $10 billion in debt. Because remember, the other times the company borrowed money, they didn't borrow money in a position of desperation. They didn't borrow money when their cruise ships were shut down completely and they were generating zero revenue. And so you can imagine if you go to a lender in that kind of position of desperation, they're going to charge high interest rates. So this incremental $23 billion in debt is at much higher interest rates than the other $10 billion in debt the company had before the pandemic. And so this is the opportunity I mentioned earlier, in that their operating income right now is negative a considerable amount, partly because it's paying so much interest expense. As the company generates cash flow, it can use that cash flow to pay down some of this high interest debt, which will then reduce the interest expense, which will then leave more cash flow, which they can use to pay down more of this interest expense, and so on and so on. That positive virtuous cycle can go on for about $23 billion or so to bring its debt back to where it was before the pandemic. And so a massive opportunity for Carnival right now to pay down its debt and reduce that interest expense. Of course, this is only if the company can generate enough cash flow so that it can pay down the debt. And so let's look at that next. So here's its cash flow from operations. And recently, it's positive, right? $1 billion in cash flow from operations in the trailing 12 months. That's excellent. But it's still nowhere near the $5 billion it was generating before the outbreak. And so if the company can continue to recover and hit this 5 billion mark again, or close to that 5 billion mark, it could then use the bulk of that, at least in the near term, to pay down that debt, which will have that impact of lowering interest expense, which will help boost cash flow from operations again, and more debt pay down, and so on for the next several years. It has that catalyst to increase its earnings per share just by paying down this high interest debt, just by getting it back, getting that balance sheet back to where it was. And then finally, I wanted to look at valuation. And looking at Carnival Cruise stock is trading at a forward price to earnings of about 15.03. It's more expensive than it was to start the year at a forward PE of about 12. So it has gotten a little bit more expensive. Although this is I would say right about the fair price for this stock. I would say this is right about the fair price at a forward price to earnings of 15, given its metrics, given its prospects looking forward, given the long-term outlook of the business. I would say this is a fair price to pay for Carnival Cruise Line stock. So whether or not it's a buy, hold, or I would say it's on the borderline between a buy and a hold. I would say it's on the borderline between a buy and a hold. You've got a business with solid prospects. I mentioned the catalysts already. I mentioned the near term unleashing of consumer pent up demand. And so, yes, those are all happening right now. But longer term, that pent up demand is going to abate and it's going to return to normal levels of business. And is that going to be enough to generate the profitability, the cash flow to make this a worthwhile investment? So those are the give and takes. Overall, I would say yes, you could buy this. It's on the borderline between a buy and a hold at current valuations.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.